Weekly Forex Forecast, Euro to US dollar, oil, XAU/USD, XAG/USD, December 18th to December 22nd, 2023. As we move into the final trading week of 2023, market participants remain focused on a mix of economic data releases, central bank expectations, and global risk sentiment, which are set to shape the direction of major currency pairs and commodities. Investors are navigating the intersection of recession fears, monetary policy speculation, and year-end market adjustments. Below is an in-depth weekly outlook for Euro to US dollar, oil, WTI Crude, XAU/USD, gold, and XAG/USD, silver, based on technical analysis and macroeconomic trends. Euro to US dollar, Euro versus US dollar. The Euro to US dollar pair continues to trade in a sideways range between 1.0700 and 1.0850, reflecting investor uncertainty amid mixed signals from US economic data and European Central Bank (ECB) policy expectations. A lack of strong momentum on either side is keeping the pair within this narrow consolidation pattern. Recent reports from the U.S. labor market and inflation numbers have highlighted that the Federal Reserve's next moves are far from certain, with investors weighing the possibility of rate cuts or a pause in tightening. Meanwhile, the European Central Bank's stance suggests a cautious path as inflation remains persistent in the Eurozone. This week, attention will focus on U.S. economic indicators, including the Consumer Price Index, CPI, and jobless claims, for insights into the Federal Reserve's next steps. Technically, a break above 1.0850 could signal a move toward 1.0900, while a break below 1.0700 may signal further downside toward 1.0650. Investors will likely watch these levels closely for market direction. Oil, WTI Crude. Oil prices are expected to trade between $70 and $74 as global supply concerns and economic slowdown fears weigh on the market. Crude prices are supported by supply discipline from OPEC+ and adjustments in production levels, though demand concerns linked to recession risks could dampen investor sentiment. Recent inventory data, such as those from the U.S. Energy Information Administration (EIA), will likely determine the near-term path for prices this week. The market will remain focused on shifts in supply-demand dynamics, with U.S. stockpiles closely monitored for signs of tightening or oversupply. Furthermore, a weakening global growth outlook could cap upward momentum, despite OPEC+'s commitment to manage supply levels effectively. A break above $73.50 could signal further bullish momentum, while a sustained move below $70 could lead to renewed bearish pressure. XAU/USD, gold. Gold prices have been trading firmly within a bullish bias, maintaining levels near $2,000 to $2,050, as investors remain cautious in the face of U.S. dollar fluctuations and central bank policy expectations. Gold has benefited from a weaker U.S. dollar and investor hedging amid economic uncertainty. Inflation expectations and the Federal Reserve's decision-making process are crucial themes for gold, with markets pricing in potential policy easing next year. The price of gold will likely focus on resistance at $2,050 and $2,100, as a sustained bullish move above these levels could signal a stronger risk-off environment. Conversely, the nearest supports lie at $1,990 and $1,975. Economic data this week, such as CPI figures or any shifts in labor market dynamics, could determine whether the recent uptrend in XAU/USD will continue or face correction. XAG/USD, silver. Silver has maintained a steady bullish tone, trading between $23.50 and $24.50 amid a mix of risk-on sentiment and expectations of industrial demand for commodities. Like gold, silver's technical strength remains rooted in a weaker U.S. dollar and recession fears, which have boosted its safe haven appeal. Silver's dual nature, as both a safe haven asset and an industrial metal, means its price action will continue to reflect macroeconomic uncertainty and investor sentiment shifts in the coming week. Key technical levels to monitor are $24.50 and $25 as potential resistance, while $23.50 and $22.80 serve as key support zones. Investors will also track U.S. economic indicators and shifts in market risk appetite for guidance. If optimism about global economic growth returns, industrial demand for silver could support a continued move higher. Economic highlights for the week. The week ahead is expected to feature key economic indicators and market-moving data, particularly out of the United States and Europe. Among the key events are U.S. inflation data, CPI and PCE. Investors will examine how inflation trends may impact Federal Reserve policy in the year ahead. ECB/global central banks guidance. As central banks look toward the new year, any hawkish or dovish commentary could move markets. Weekly inventory data for oil, US EIA and API figures will be in focus for supply insights, especially given recent oil price volatility. Global economic data, PMI and recession indicators, data reflecting consumer confidence and global economic growth could influence risk assets and commodities. Investors will approach these events with caution, given that the holiday season may result in lower liquidity levels and increased volatility as participants close out their positions for the year. Conclusion. As we wrap up the year, market attention will remain focused on economic data, monetary policy, and investor sentiment. Euro to US dollar is likely to stay in its recent range unless a significant change in the economic narrative emerges. Oil markets will trade between $70 to $74, driven by supply concerns and demand fears. Gold and silver remain supported by a weaker US dollar, recession fears, and demand for safe havens. This week's economic events will set the stage for trading ahead of the new year, as global markets look for clues about 2024 trends. Traders are advised to stay nimble and maintain prudent risk management as liquidity remains thinner and economic uncertainties linger.